I should explain this. Actually, we didn't discuss this factoring, right? Did we discuss this factoring concept?
Yes, sir.
Okay. Then inventory valuation. So how we need to go with the inventory, and what are the main elements which we need to consider? So here, if you see inventory, wholesale or retail, purchased and resold by a merchandising company, nothing but the trading company. So under this particular inventory, we need to understand about three major elements. One is raw material, work in progress, and finished goods. Now, generally, in raw material means held for use by manufacturing companies. Nothing but raw materials are nothing but if any material which is purchased by the manufacturing company, and it means they will be purchasing the raw material, and the raw material will be processed into finished goods. And work in progress. Now, here very important. Work in progress is nothing but this is the type of material which cannot be considered either as raw material or as finished goods. So it means an intermediate stage of the products are considered as work in progress. It means already some production process will start, but it is not yet completed. So let us assume that if you take some examples, let us assume that uh, a company is manufacturing certain products. So the raw materials they processed it, but it is not converted into the finished product. So that is considered as work in progress. Now let me take an example for this is now the example a laptop manufacturing company is there. Now in that case they purchased some components, but it is not yet fully converted or the semi-finished stage. Semi-finished stage means you cannot consider those products as raw material, and as it cannot be considered as a finished product, right? And finished products is nothing but the products which are completed and which can be readily usable by the company for sale. So when you are going with the inventory, you should consider the three elements: raw material, nothing but this raw material is something which is related to the manufacturing companies. They will purchase the raw material and they will process it and they will be selling the finished goods. Work in progress. So here work in progress is nothing but the intermediate stage. It cannot be considered as raw material as well as the finished goods. And the finish now generally here it includes in the work in progress. Whenever you dealing with the work in progress, you need to include the raw material, direct labor, and manufacturing overheads. So generally, these are the three important components which we will be showing under this work in progress. Now, the finished goods production completed and ready for sale. This is finished goods. Now, first we will be discussing some important elements in this, what we need to include and what we need to exclude when it comes to the inventory valuation. So the first one is goods in transit. Now, the key consideration is when it passes from the seller to the buyer. So it means when the goods is the main point which we need to consider is when the title passes from the seller to the buyer. So here, shipping point title passes when the transfer from seller to the common carrier, and destination title passes when the transfer from the common carrier to the buyer. So, so non-conforming goods. So here, title reverts upon buyer's rejection because the buyer might return some goods. So those is considered as non-conforming goods. Consigned goods. Now, generally consigned in the sense if a principal try to sell the goods through an agent, then that particular consideration is that particular transaction is known as consigned. So in case of consignment, consignor retains the title until the consignee sale. Suppose example, X company is a consignor. Suppose X is a company which belongs to India. Now this company want to sell or For your better understanding, let me take example of Patanjali company, because why I am taking Patanjali is Patanjali don't have any other branches in the foreign countries. Now this Patanjali company want to sell their products in Australia. Now in that case, they entered a consignment agreement with an agent in Australia. So Patanjali will be selling the goods to that particular agent, and the agent will be selling the goods. So in that particular case, when the sales are finally done by the agent, now technically agent is known as consignee. Now in the given example also, consigner is nothing but Patanjali company, and the agent in the Australia is considered as consignee. So in case of consignment, the title retains until the consignee sells. So up to the sale of the consignees, the title lies with the consigner only. Is that clear, guys? So in this case, you need to clearly understand that in case of consignee, unless the consignee sells the goods, the title will be retained by consigner only. And mainly the non-conforming goods are nothing but the title reverts up to the buyer's rejection of the goods. So when the buyer rejects nothing but sales returns, so the title will be reverted. Any query on this slide, guys? Any question on this slide? Now there are certain important things. Try to focus. Now Harrisco has several inventory shipment in process at the year end. So there is a company called Harrisco. They have several inventory shipment in process at the year end. First one, $55,000 of goods in transit from Emmons Corporation. 55,000 of goods in transit from Emmons Corporation, a supplier. The goods are shipped FOB destination. So the goods are shipped to the destination point. Okay. Then 38,000 of goods in transit from Jones and Co., a supplier. The goods are shipped FOB shipping point. Then 58,800 of goods in transit to Dawson in Co., a customer. The goods are shipped FOB shipment point. Then 25,680 goods in transit to Moge Co., a customer. The goods are shipped to FOB destination. Now here the requirement is we need to determine which inventory purchases should be included by Harrisco, means which inventory purchases should be included in the Harrisco and in the determination of ending inventory. So finally, the ending inventory according to this we need to compute. Just here you might be confused. FOB is nothing but free on board, right? Generally we use the term is nothing but FOB is nothing but a free on board, right? If possible, try to make a note of it. Don't confuse it. FOB is nothing but free on board.
Free
Okay,
on
board.
what is board?
BOARD. Free on board. Now, what exactly free on board is means? Now, normally, suppose X Limited company is there. They are selling the goods to the Y Limited company, right? Now, X Limited company goods left nothing but that particular goods left the godown or the warehouse of the X Limited company. Then it is shipped free on board is nothing but the transaction is entered. So we can assume that the sale is done. Is that clear? So free on board is nothing but the initiation to transport the goods is started. That is known as free on board. Okay. I hope it is clear. Yeah. Now first we try to understand the first designation. 55,000 of goods, $55,000 of goods in transit. The goods are in transit from M1 score. It means a supplier sold goods to our company. What is our company here? Harris and Co. So $55,000 worth of goods is goods in transit which is supplied by MS and Co. The goods are shipped FOB destination. Okay, the goods are in FOB destination. Now here what we need to do further, whether you need to include it in the inventory or whether we should exclude it in the inventory. Now try to understand this. Harris does not include the inventory purchase FOB destination until Harris receives the goods and does not reject them as being wrong goods. Now try to understand the concept here. Supplier here, Emission Co is nothing but the supplier. Supplier sent the goods. The goods are in transit. The goods are shipped free on board. Right? Now, in this case, the question is, can this Harris Co include it as inventory? You cannot include it because there is a simple logic. How, see, once you receive the goods, you need to inspect the goods, right? First, we need to verify whether the goods is as per the specific criteria or not, whether the good satisfies the required quality or not. Unless it is as per the quality and as per the conditions, you won't accept the goods. There is a great possibility that the Harris and Co might reject the goods. Of course, the supplier might have initiated the sale, nothing but initiated the transport. But until you inspect the goods, you cannot include that particular goods as a purchaser in your inventory. I believe the transaction one is clear, guys. So that's why it should be excluded from the inventory. Clear? Is that clear? Or
No, sir.
you didn't understood?
No, sir.
See, here what the statement say, 55,000 goods in transit from Emission Co Corporation. It means our company. What is our company here? Harrisco. This Harrisco company purchased 55 worth of goods and these goods are in transit. So the supplier sold the good. Who is the supplier here? Emission Corporation. The goods are shipped on free on board destination. It means that the goods are already shipped. Now the question here is, can Harrisco include this 55,000 as their inventory, guys? Suppose you purchased goods from me. Now I transported the good. The transport started. Nothing but the goods are in transit. But you didn't receive the goods. Can you include this 55,000 worth of goods in your inventory? You didn't receive it. Just it is in transit only.
Yes, sir.
Will you
No,
include
sir.
it in your
Exclude.
inventory?
No,
Definitely
sir.
you will exclude.
Include.
Yeah.
Yes, sir.
I hope it is clear, guys.
Yes, sir.
Yes. Now the third one, second one is 38,000 of goods in transit from Jones Co. 38,000 of goods in transit from Jones Co. It is other supplier. The goods are shipped FOB shipment point. So 38,000 goods in transit from Jones Co. A supplier. The goods are shipped FOB shipping point. Right? Now, in this case, what we need to do? So what is the difference between these two? Here the goods are shipped FOB destination. Here the goods are shipped FOB shipping point. What is the difference between these two? Did you understand the difference here? FOB destination and FOB shipping point. Okay, no issue. Let me explain the concept here. Suppose the difference between free on board destination and free on board shipping point means, first let me explain about the first case, Emission Corporation. So this Emission Corporation, they sold goods and the goods are in transit, but the goods are shipped FOB destination, free on board destination. Free on board destination means it is here you can see Harris does not include the inventory purchase until the Harris receives the goods and does not reject them as being wrong goods. But if you see the second point, the goods purchased from Jones should be included in inventory because the title passed at when the goods are picked by the shipper. Now, what difference you found between these two? I give 2 minutes time, so try to understand the difference in this case. I request everyone to please go through the first two transactions. What difference you found? Yes. Yes. Dhanlakshmi, Ankit, Maz. Any clue? Because both the transactions look similar. The only thing is FOB destination and FOB shipping point. So if you get confused, let me show this. Just try to see this. Here you can see they clearly gave what will be the consequence in case of FOB shipping point and FOB destination. Here FOB shipping point destination. Suppose destination if you see title passes when transferred from the common carrier to the buyer. Title passes when transferred from the common carrier to the buyer. Okay. You are very near to the answer, Ankit. Correct. Shipping point means title passes when transferred from seller to the common carrier. Title passes when transferred from the seller to the common carrier. Title passes when transferred from the common carrier to the buyer. So these two terms are compulsory tested in your MCQs. So first point you need to understand, if it is a FOB destination, in that case, the title will be transferred to the buyer. Title passes when transferred from common carrier to the buyer. Nothing but whatever the transport courier is there, when it is transferred to the buyer, in that case only the title will be transferred. It means the shipment will be two types. It will be FOB shipment or it can be FOB destination. Now, what is the difference between these two? If the transport is FOB destination, if it is FOB destination, the title will be transferred to the purchaser only when the purchaser receives the goods. Title passes when transferred from common carrier to the buyer. But if it is an FOB shipping point, in that case, the title passes when the transferred from seller to the common carrier. Is that clear, or you want me to give an example for this? Should I give an example, guys, or is it
Yes, sir.
clear? Okay, no issue. Let me give an example. Suppose X Limited Company of India sold goods to Y Limited Company of Australia. X Limited Company sold goods to Y Limited of Australia. Now, in that case, if the transport is done through FOB destination, if the transport is done through FOB destination, then that Australian company which purchased our goods, they need to show it as their inventory only when they received it, because it is a FOB destination shipment. And the second one, if the transport system is FOB shipping point, if it is a FOB shipping point agreement, in that case, when the Indian company approach the courier, when the goods are shifted, suppose through this blue dot courier, the goods are transferred to the Australian company. Once the goods are given to the blue dot courier, then in that case, Y Limited can assume it as a because it is a FOB shipment point. So two types of elements. If it is FOB destination, unless the purchaser receives the goods, you cannot include it in your inventory. Point number one. If it is an FOB shipment point, when the seller gives the goods to the transport company, nothing but the carrier, purchaser can include it in their inventory part. I hope I am clear on this now. Is it clear, participants?
Yes, sir.
Now just see the third transaction. 15,800 of goods in transit to Dawson Inc., a customer. Now in this case, this Harris company is selling the goods to customer. In the previous two transactions, Harris purchased the goods from the supplier. Now in the third transaction, the company, this Harris company sold goods to Dawson and Co., a customer. The goods are shipped FOB shipping point. Very interesting. Now the agreement is goods are shipped FOB shipping point. Now in this case, the question is, in the books of Harris and Co., do we need to include it in the inventory or exclude it in inventory? 15,800.
Excluded, sir.
Because when the goods are shipped through FOB shipping point, I already mentioned that once it is given to this transport company, then the title will be passes to the purchaser. Now here Harris and Co is a seller, so definitely we need to exclude from the inventory. Then the last one, 25,680 goods in transit to Mange Co, a customer. The goods are shipped to FOB destination. So in case of FOB destination, we already learned that unless the purchaser receives the goods, the title will not be transferred. So up to the point, so up to the date of receiving the goods by the purchaser, we need to include this 25,680 as an inventory. So I give 2 minutes time. See, Blue, please go through this question. If anyone have any questions, let me know. Because I will be giving another example also. I need answers for that. Shall I show a small example illustration? Shall we do that?
Yes, sir.
Yeah. Now you need to, there are two companies, X Limited company. Right. So you need to ascertain whether it should be included in the books of X Limited or not. So the first one, case one, X Limited purchased goods and it is, so X Limited purchased goods, then goods are in transit. Goods are in transit. So it is a free on board destination. So the total worth of goods is 10,000. Now in the books of X Limited, so in this case here you need to assume X Limited purchased the goods. Now in the books of X Limited, do we need to include this 10,000 or exclude? If it is FOB destination.
Exclude.
Exclude. Very good. May I know the reason why exclude?
Still, we're not receiving the goods, sir. We just
Exactly. Unless the purchaser receives the goods, you cannot include. So it should be excluded. Very good. Now the next one. X Limited sold goods. Goods are in transit and it is FOB destination. Now, what will be the answer, guys? In the books of X Limited, do we need to include or exclude?
Include, sir,
May I know the reason?
because we are sold goods.
Yes, we sold goods, but the purchaser didn't receive it. So until
Yes,
the
sir.
purchaser receives the goods, we should seller need to include it. Excellent, very good. So I hope participants, the first two things are clear. Any query?
No, sir.
Yeah. Purchased 10,000. Now it is FOB shipment. Now if it is a FOB shipment, we need to include or exclude.
Include, sir.
Perfect. Very good. Include. Now, now it is you exempted sold the goods. Include or exclude?
Exclude, sir, because
Include,
it's
sir.
not each our customers.
Sorry?
Sir, it's exclude because we sold the goods and it's not reach to the customer.
No, 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 no. It is exclude only, correct. But here do remember this. In case of FOB shipment, very, very important point. If it is an FOB shipment, when you are selling the goods, it is not necessary that the customer should receive the goods. Once the shipment is initiated, if it is an FOB shipment, once the shipment is initiated, you should assume that the custom title is transferred. Not necessary that the customer should actually receive the goods. In case of FOB destination, customer should receive it. So in this case also, X sold the goods and it is FOB shipment. It means the title is transferred to the customer. So that's why in the books of X Limited, we should exclude it.
If,
Clear?
okay,
Yeah,
sir. If our goods are given to a common carrier, so it is excluded.
exactly. Correct.
Yes, sir.
Compulsory, it will be tested as an MCQ. So if anyone have any query, please let me know on this. So can I assume that it is clear for all? Next. Now the inventory system. In the inventory system, we generally have two types. One is periodical and the second one is perpetual inventory system. We'll be having two inventory system, periodical versus perpetual. Now, periodical inventory system, here the quantity of inventory determined by physical count and cost of goods sold computed indirectly. And if it is a perpetual inventory system, inventory quantity updated with each purchase and sale. So it means whenever there is a purchase and sale, the inventory quantity will be updated. And physical count used to check adjust inventory balance. So here we will be going for physical count to check the and adjust the inventory balance. So normally here you need to understand the cost of goods sold computed indirectly means how you will compute opening inventory, and to this opening inventory the purchases of inventory during the year, then that is cost of goods available for sale. From that we'll be deducting the closing inventory. So then we'll get cost of goods sold. Very, very important. How the cost of goods sold will be computed? First opening inventory, then inventory purchased during the year, then that is considered as cost of goods available for sale. From that, if you deduct the closing inventory, that is physical count, then it is considered as cost of goods sold. So the main difference between periodical inventory and perpetual inventory is, so quantity of inventory determined by physical count, and in case of perpetual, inventory quantity updated with each purchase and sale. Whenever there is a purchase and sale, the inventory will be updated, and definitely the physical count will also be purchased. But here you need to understand how exactly we'll get cost of goods sold. We'll be taking the opening inventory. To that particular opening inventory, we'll add the purchases, then we'll get cost of goods available for sale, and from that, when you deduct the closing inventory, then we'll be getting the cost of goods sold. Now there is a small question, try to understand this. ABC company sold 20,000 units of inventory. ABC company sold 20,000 units of inventory for $7 per unit. The inventory had a original cost of 5 per unit. So this ABC company, the original cost of inventory was 5 and they sold it for 7. Now what is the requirement here? Prepare the journal entries to record the sale using periodical and perpetual methods. So first we'll go with the periodical method, then the journal entry we discuss for the perpetual. Very, very simple. So the journal entry to record sale under the periodical method. Now as per periodical method, the cost of goods sold will be recorded after the periodical inventory count. Very, very important. Try to understand. If it is a periodical method, how we'll be computing here the cost of goods sold is done after this inventory count. So in this case, the total unit sold is 20,000 and they sold each unit for $7. So the entry for sale will be 1 lakh, that is cash to sales. The entry for sales would be cash to sales. So because the journal entry to record sale under the periodic method, here the cost of goods sold will be recorded after the periodic inventory count. So after this periodic inventory count, we always go with the cost of goods sold computation. So 20,000 units was sold for 7, so it will be 1,40,000. So the journal entry as per periodical method would be cash to sales. But interestingly, when you see this perpetual method, yes, cash to sale, the entry for sales, but here try to understand the cost of goods sold. Now you might have observed the difference. Cash to sales in case of periodic method, but in case of perpetuity method, we sold the goods and we wrote an entry for cash to sale. But when it comes to the cost of goods sold, in case of perpetual method, we always need to consider the original cost per unit. Actually, how many units you sold, cost of goods sold. That term itself clearly explains the meaning. Cost of goods sold. It means whatever goods you sold, what were it cost? Of course, you might have sold it for 7 per unit. But what is the cost of goods sold? You sold 20,000 units, but it actually initially costed only $5 per unit. So the cost of goods sold will be 1 lakh. So cost of goods sold to inventory 1 lakh. Did you understand the difference here? Difference between the periodic as well as perpetual?
Sir, can you please explain again the periodic?
Yeah. Suppose in case of periodic, just try to see this. In case of periodic inventory system, quantity of inventory determined by the physical count and cost of goods sold computed indirectly. So here computed indirectly means beginning inventory plus purchases plus cost of goods available for sale, then ending inventory, that is physical count minus the difference which we get. Cost of goods available for sale minus inventory is nothing but cost of goods sold. And in case of perpetual, inventory quantity updated with each purchase and sale. This is very important. And physical count used to check the adjust inventory balance. If you what exactly those statements is, Whenever you are going with a periodic method, this COGS, that is cost of goods sold, will be recorded after the periodic inventory count. It means what? Because the name itself says a periodic method. It means for a specific period, the cost of goods sold will be computed. Not necessary that whenever the sales are done, we should compute the cost of goods sold. So generally, it will be computed maybe at the end of the year, not every time, because the company will purchase or sell the goods multiple times in a year. So when the company is going with the periodic method, there will not be any computation for cost of goods sold when there is a purchase or sale. So that is the reason we are not recording cost of goods sold for the periodic method. Just we are showing only the sales entry. But if it is a perpetual method, the it is clearly says whenever there is a purchase and sale, here you can see, whenever there is an updation to the inventory, whenever there is a purchase and sale, you should compute the cost of goods. That is the reason here we showed the cost of goods. Because in case of periodic method, it will be done only at the end of the year. But in case of perpetual, every time whenever you purchase or sell, you need to record the cost of goods. I hope I am clear on this.
Yes, sir.
Yeah. Now ABC company purchased 50,000 units of merchandise for $6 a unit to be held as inventory. Now the requirement, prepare the journal entries to record the purchase of inventory under the periodic and perpetual. So in case of periodic method, here if you see the periodic method, when you purchase the goods, you purchase 50,000 units for $6. So the total value will be purchases 3 lakhs to cash 3 lakhs. Purchases 3 lakhs to cash 3 lakhs. Then journal entry to record the purchase under the perpetual method. So here the entry will, because every time you will be updating the inventory there. Try to understand the logic here. If it is a periodic method, you purchase the raw material. So that's why you showed purchases to cash. But if it is a perpetual method, as I mentioned, whenever there is a purchase or sale, there will be an update to the inventory. So that's why we showed here inventory to cash. One of the most commonly asked question. Journal entry for inventory purchases under perpetual method and journal entry for inventory purchases under periodic method. So if it is a periodic method, the journal entry which we make will be purchases to cash. The reason why purchases to cash, the physical count will be done at the end of the period only. But in case of perpetuity, whenever you purchase new material, inventory count will be done. So that is the reason we are showing inventory to cash in case of perpetuity. So I believe you are with me till now. If anyone have any query, let me know. Is it clear, guys?
Yes, sir.
Yeah. Primary inventory cost flow assumption. There are certain key assumptions which we need to consider. So cost flow assumptions are used for valuing the inventory. Now, as per US GAAP, does not require the cost flow assumptions to mirror the physical inventory flow. So objective is that the method most clearly reflect the income earned. So generally, most important thing is cash flow assumptions are used. Sorry, cost flow assumptions are used for valuing the inventory. Then here it doesn't mean that it should clearly reflect the method. One second. Now directly I will be going with the assumptions method here. So specific identification. One second. So specific identification method, cost of each item is uniquely identified and tracked, because under this cost flow methods, we have some important methods. The first one is specific identification method. Second one, first in, first out, then weighted average, then moving average, then last in, first out. Now, first method is our first method is specific identification method. First, let me explain what is this specific identification. So, cost of each item is uniquely identified and tracked. And first important thing, this specific identification method is mainly used for those inventory which whose cost is very high. Now, technically, we say it as HDI. HDI is nothing but high dollar items. High dollar items are in simple terms, if the inventory is very, very cost. Suppose for your understanding, sorry, let us assume that there is a jewelry company. Now, what is the inventory for jewelry company, guys? Gold and diamonds, right?
Yes, sir.
Now, these gold and diamonds are very costly. So for these kind of jewelry company, we'll be going with this SIM, nothing but specific identification. So here the cost of each item is uniquely identified and tracked, typically used for physically large or high dollar items. Potential for manipulation if there are two identical items with different cost. So there is a possibility of manipulation if there are two items with different cost. This is specific identification method. And the next one is first in, first out method. So directly here, one second, let me explain the first in, first out method with a small example. Just give me a second. Do anyone heard about this first in, first out method? Or is it first time?
No, sir. First time,
Okay.
sir.
Okay. I hope everyone can see my Excel sheet.
Yes, sir.
Yeah. So on 1st January 2021, 1000 units are purchased. 1000 units are purchased at the rate of 10 per unit. And then on 3rd January 2021, let us assume that 2000 units are purchased at the rate of 15 per unit. On 5th January 2021, issued 1200 units. Then on 7th January 2021, another 2500 units are purchased at the rate of $17 per unit. On 9th January 2021, issued 900 units. Now the last one, 10th January 2021, 1400 units were purchased. Units are purchased at the rate of $19 per unit. Now try to understand. This is the influence. It means a company purchased first 1000 units on 1st January, and again they issue 2000 units. They purchased 2000 units on 3rd January, and they issued 1200 units on 5th January, and again 7th January they purchased another 2500, like this information. Now we try to compute by using the weighted average method. Sorry, first in, first out. So how exactly we should record? Now see this. Read. Purchases. Issue. Balance. Now see this. So what is the transaction on 1st January? Is it purchases or issue? Is it purchases or issue on 1st January?
Purchased, sir.
Purchases. So units, rate, amount. Yes. So on 1st January 2021, there is a purchase. So how many units we purchased?
1,000 units.
1000 units. At what rate per unit is 10? So the
Yes, sir.
total amount will be 10,000. 1000 into 10, 10,000. So there will not be any issue on 1st January. So that's why we are showing it as nil. And balance, how many units we are having in our go down? 1000, rate 10, amount 10,000. I hope the first transaction is clear for all guys.
Yes, sir.
Now, 3rd January. On 3rd January 2021, how much were we, is it purchase or issue?
Sir, purchased.
Purchases. So we purchased 2000 units. Rate is 15. Now the amount will be
30.
30,000, right? So there is no transaction in issue. So nil, nil, nil. What will be the balance? Already we have 1000 units at the rate of 10, 10,000. And we also have 2000 units at the rate of 15, amount 30,000. Is it clear? This is our balance amount. Is it clear? Is it clear, guys?
Yes, sir.
Yeah. This is our balance because on this particular day, we have this particular balance amount. Okay. This is our balance. Now the next date is 5th January. Now what is on 5th January? Is it purchase or issue?
Issued, sir.
So it is issue. So there will not be any entry in purchases. How many units we issued?
1,200.
1200. Yeah, 1200 units we issued. How many units we have in our godown? 1000 units of $10 each
1,000.
and 2000 units of
1,000.
$15 each. Two units are two types of stock is there. Now, when you issue 1200 units, the question will be from where we need to consider whether we need to take this 1200 from 2000 units or 1000 units. I hope you understood my question. Because
No,
you
sir.
issued 1200 units. From where we need to take from the balance? Yes. because we are following first in, first out. So whatever material you purchased first, issue that material first. That is nothing but first in, first out. I believe you understood my concept. The material which you purchased first. Now in these 1000 units and 2000 units, which material we purchased, guys, first? 1000 units, right?
1000.
So whenever you are issuing, first you need to issue that particular 1000 units first, right? How many units are issuing here? 1200 units. But the first lot is only 1000. So 1000, 10, 10,000, and we need another 200 units, right? That 200 units you need to take it from next lot. 200, 15, 3000. Now what is the balance, guys? How much balance we are having in our godown? How much balance we are having in our godown?
10,000 and 30,000.
See, this is our balance on 3rd January. So on 5th January, we issued out of 1000 because first lot we are having 1000.
800, sir.
Exactly. 800. And what should be the rate?
Rate 10.
Rate 10, 10 or 15?
15, sir. 15.
Yeah, because already the first lot is completely completed.
Completed.
Yeah. And out of second 2000, we issue 200. So that's why we have 18. So 800 into 15. So how much it will be? 12,000. I believe it is clear.
Yes, sir.
Then next date 7th January 2021. Is it purchase or issue?
Purchased.
Purchases. So how much we purchased? 2500. Rate 17. Amount will be 2500 into 17. So it will be 42,500. There will not be any entry in issue. Now what will be our balance? Can anyone? How much? What should be our balance now? How much we need to show the balance? You know the answer. Definitely you know the answer. How much balance we should record? Yes. First, already how much balance is there in our godown?
So 1,000.
On 5th January, after issuing this 1200, how much balance you are showing?
800.
800, 15, 12,000. So first you need to write that 800, 15, 12,000. Then the stock which we purchased on 7th Jan, that is 2,500, 17, then 42,500. So this will be the balance on 7. I believe you understood it. Is that clear?
Yes, sir.
Then 9th January.
Issuing, sir.
Yes, 9th January is issue. So there will not be any entry on purchase. Now can anyone, how we need to issue now? Now how much we issued? 900 units. So how we need to record the issue now? You can take your time. because on 9th January we issued 900 units. So how these 900 units need to be recorded? How much stock we are having in our Gordon? How much stock we are having? We are having two stocks. One is 800 stock and the other one is 2500 stock. Now on 9th January we are issuing 900 units. So
Sir,
how we need
1600.
1600. How you got that?
Sir, minus 900, 2500.
Yeah. Now, but my question is here in the issue column, you issue 900 units. So how we need to record it? So from which lot we need to take 900? Because we have two lots in our godown. One is 800 lot and the other one is 2500. From which lot we need to issue? This 900.
800, sir.
Yeah, because first in first out means whatever our first stock is there, that need to be given. 800, 15, 12,000. And then we need how much stock now? Because we issued 900. So we completely used the first lot of 800. Then we need how much? Because
2500.
no. Here on 9th January, how much we are issuing? 900 units, right? So
Yes,
out
sir.
of this 900, the first lot we have only 800 units. So that's why complete 800 we issued. Then we need extra how much stock? 100 units, right?
Yes, sir.
So 100 and 100 from where we need to take, as you said, from 2500 we need to take.
Yes, sir.
17. So 1700. Now what will be the balance, guys? What will be the balance? In balance?
1600.
Yes.
1600.
Is it 1600? Because previously our balance is 2800, one lot, 2500, second lot. So 800 is completely utilized. And from 2500 we utilized 100. So how much stock we are having in our godown?
1700.
Out of 2500, we issued 100.
1400.
Exactly.
2400, sir.
Yeah,
Yeah.
2400 into 17. Amount will be 2400 into 17. So it is 40,800. I hope I'm clear. Yes.
So we should deduct from second
Yeah.
2500.
Because see, on 7th January in our godown, we are having two boxes. Let me put in this way. One box of 800 and second box of 2500. On 9th January, when you issued, you need to issue how many units on 9th January? 900 units. So we completely used the first box. Now there is no stock in the first box. And extra 100, we used it from the second box. Now what is the balance after 9th January? Because first box is 0. We have only the second box, that is 2500. In the 2500, we issued 100. So we need to show 2500 at the rate of 7. I hope I'm clear on this.
Yes, sir.
Then the last date, 10th January 2020. So it is a purchase. 1400, 19. Amount will be 1400 into 19. So there is no stock. Here there is no issue. So issue will be nil. Now you need to let me know what will be the balance now. How much? How we should record the balance? What will be the total stock as on 10th January 2040? Total stock. How much stock is there in your godown on 10th January?
1400.
Only 1400 you are having, or any previous stock you have? Only
2400.
exactly. First you need to write 2400 17, 40,800. Then on 10th January, you purchase 1,400.
1400.
Yeah, 19, 26,600. I hope it is clear.
Yes, sir.
Now let me add one more line, guys. On 12th January 2021, sorry, issued 2,700 units. Now you need to take some time. Just what will be the answer now on 12th January? On 12th January, the company issued 2,700 units. So anyway, there will not be any entry in purchases. So how we should record in issue and balance? How we need to record? Total units issued is 2,700. First thing you should know how much stock we are having. What is the total stock in your godown? Two stocks are there. One box of 2,400 units and another box of 1,400 units. On 12th January, you issued 2,700 units. So how we need to issue?
Sir, 2700 deduct from 2400, sir.
Can we deduct 2,700 from 2,400?
Yes, sir.
Can we deduct 2,700 from 2,400?
We got 300 balance.
Yeah, 300 balance we should do from the second lot, right?
Second one.
So it
So
means
1100 is the answer.
no. First in the issue column, how much I need to write? 2,000.
Sir, your voice is.
Am I audible? Am I audible now? Hello.
2,700, sir.
Now we need to record
Yes,
2,700
sir.
because in the first lot, how much stock is there? Only 2,400
400.
into 17, 40,800. And how much stock we need to take from the second lot? 300. So 300 into 19. So what will be the amount? 300 into 19. And the balance will be? What is the balance?
1100.
Very good. 1,100 into 19.
19.
Yes. This is known as first in, first out method. So whatever material you purchased first, issue that material first. This is known as first in, first out.
Sir,
Any
can you please share this Excel sheet?
Excel sheet? 1 second. You are using laptop or mobile now?
Sir, mobile, sir. Wait, sir. Scroll down, sir. I'll take screenshot.
Okay.
Scroll
One
down,
second.
sir.
1 second. Yeah. Just give me 1 second.
Scroll up.
Hold on. 1 second. 1 second.
Yes, sir.
Yes. Now it will be clear for you.
Yes, sir.
So you want me to scroll up, right?
Yes, sir. Yes, sir.
Yes.
I take it, sir.
Yeah, thank you. If possible, try to share with your friends also. Okay. Yeah. Now, shall we see one more question on this? They gave a question. Let me see.
Yes, sir.
Yeah. Yes. Now, during its first year of operation, Helix Corporation has purchased all of its inventory in 3 batches. So batch 1 was 4,000 units at the rate of 4.2 per unit. Batch 2 was 2,000 units at the rate of 4.5 per unit. Batch 3 was 3,000 units at 4.75 per unit. So in total, 4,000 units were sold, 3,000 units after the first purchase and 1,000 units after the second purchase. So first here sold is nothing but guys issue.
Sir,
So
your voice is not audible.
not audible. I have very good network today. 1 second. Can you hear me now? Am I audible, guys? Hello.
Yes, sir.
Yeah, yeah. So here, during its first year of operation, the corporation has purchased the inventory in 3 batches. Batch 1, batch 2, and batch 3. So they purchased around 4,000 units in batch 1, and in batch 2, 2,000 units, and batch 3, 3,000 units. And the total materials which they issued is, or nothing but sold, is 4,000. So 3,000 units after the first purchase, it means after batch 1, and 1,000 units after the second purchase. Now try to understand this. So determine the amounts ending inventory and cost of goods sold using FIFO method, that is first in first out method, and the periodical and perpetual systems. So first FIFO method by using periodical inventory system. So when you are going with the periodical inventory system, it is very, very simple. So the total units bought is how much? 4,000 and 2,000 and 3,000. At what rate they purchase? 4.25, 4.75, 4.5075. So here you can see first units purchase 4,000 at 4.25. The total amount will be 17,000. 4,000 into 4.25, 17,000. Second 2,000 into 4.50, it is 9,000. And then 3,000 it is. So total inventory is 40,250. Closing inventory. Now here you need to know the closing inventory, because the total value of the inventory 4 plus 2, 6 plus 3, 9. In that 9,000, how much we sold? 4,000. So the closing inventory will be this one. So it is 23,250. So finally the cost of goods sold 40,250 minus 23,250 is 70,000. So the periodical inventory system is very simple. I don't think you have any query on the periodical inventory system. Next is perpetual. Is that clear, the periodical inventory system?
Yes, sir.
Now the actual one, that is perpetual inventory system. Now here you need to apply your first in first out method. First you purchase 4,000 units at the rate of 4.2. So the inventory is 17,000. And immediately here they mentioned 4,000 units were sold, 3,000 units after the first purchase. What is our first purchase? 4,000 units. So immediately after that, how much they issued? Nothing but how much they sold? 3,000. So what rate we need to consider? How much we are having balance? Only 4,000, right? So 3,000 into 4.25. So change in inventory will be 12,750. Balance 17,000 minus 12,750. The balance will be 4,000. Any query, guys, on this? Then the second one, that is, here you can see, and 1,000 units after the second purchase, and the second purchase was 2,000 units. So 2,000 we purchased it 4.50, and the change in the inventory will be 9,000. Right? So 2,000 into 4.50, 9,000. So what is the total stock? Previous year 4,250 and the recent one 9,000. The total stock will be 13,250. Then again after the second purchase here you can see 1,000 units after the second purchase. You issued 1,000. So from where we need to take from the first lot only. So that's why we took here 4.25. If you find confusing with this particular method, you can use this method also. Okay, because here in order to minimize your confusion, I clearly showed with this particular demonstration. You can use this method if you find this method confusing. My advice is better to go with this method so that you won't have any confusion. Will you try, guys? Will you try this one?
Yes, sir.
So what you should do is just take the picture of this. Okay, this one. This question is there, na? Just take the picture of this and try to use it. Try to use this method. This will be your homework.
Yes, sir.
Yeah. So take the picture of this.
Sir, but perpendicular and perpetual and periodical, both answers are same, sir.
Now, generally, when you are going with this uh, first in first out method, the both the answers will be same. But if you go with the other methods like weighted average, the amount will change. Because here it is a first in first out method, so that's why both the amount is same. Okay.
Okay, sir.
Yeah. But if you apply the other methods, it will change. Yeah. So just take this question. I want you to please solve this. That will be your homework. Okay. So then weighted average and other methods we'll be discussing in the next class. Because if I explain the weighted average now, definitely you will be confused. So any question on today's discussion? Anyone have any queries? Let me
No, sir.
know. Okay. Then. So that's it for today. So please, I hope you will be doing this home assignment. And tomorrow, first to 10 minutes, if you have any query, we'll do it. I will be doing this by using this method. First 10 minutes. Okay.
Yes, sir.
Yeah.
Thank you, sir.